The clock just hit 0. And while most of the world is watching the headlines, the real story is happening in the COMEX vaults at exactly 7 p.m. tonight. If you thought the inventory at 0 warning was a drill, the next 24 hours are about to prove you wrong. The silver shorts aren't just trapped anymore, they're being liquidated. Look at the settlement data from today's close. We've seen a massive surge in exchange for physical notices. This isn't paper trading, this is the big money demanding the metal that the COMEX literally doesn't have. With the vaults empty, the banks have two choices: default on the delivery, or buy silver at any price on the open market. Guess which one they're choosing to save their own skin. Our analysis from earlier confirmed the shorts were backed into a corner. Now, we're seeing the stop-loss hunt. The mathematical certainty of a $50 breakout is no longer a theory. It's the only way the system can rebalance. The banks are trying to suppress the price one last time to exit their positions, but the physical drain is moving too fast. Why is tomorrow critical? Because the delivery window for the May contracts is slamming shut. By the time you wake up on Wednesday, the price discovery mechanism for silver might be completely broken. We are looking at a limit-up scenario where you won't even be able to place an order. The system is designed to keep you in paper while they take the physical. Don't let them. Tonight, the clock hasn't just stopped. It's been reset. We've talked about the COMEX inventory hitting 0, but tonight we look at the aftermath. What happens when the world's largest paper exchange has no physical metal to back its promises? We are entering a global physical reset. The gap between paper price in New York and physical price in Shanghai is no longer a gap. It's a chasm that is swallowing the shorts whole. Let's break down the mathematics of the drain. We need to look at the registered versus eligible inventory levels. For months, we've watched the 77 million ounce threshold act as the final line of defense. That line has been breached. Registered silver is the metal available for delivery, and it has plummeted to levels that make the 2011 spike look like a warm-up. When the registered category hits 0, the exchange for physical mechanism becomes a trap. Banks are desperately moving their obligations offshore to the LBMA in London to avoid a public default in New York, but London is running dry too. This is a synchronized global depletion. Think about the 8 largest commercial traders. These institutions are naked short. They have sold hundreds of millions of ounces that they do not possess. In a normal market, they use algorithms to smash the price. But retail isn't selling. The silver subreddits, the physical stackers, and the sovereign wealth funds are taking delivery. The banks are staring at a margin call of biblical proportions. Now, consider the Shanghai Factor. While New York tries to pin silver at $30, the Shanghai Gold Exchange is trading at a $14 premium. If you are a silver producer, why would you sell your metal to COMEX for $30 when you can ship it to China and get $44? The arbitrage engine is literally pulling every available ounce of silver out of the West and moving it to the East. This is the end of Western price discovery. We are watching the transition from a debt-based paper price to a demand-based physical price. As we move into the global macro triggers, watch the Japanese yen. Japan's currency intervention is forcing them to liquidate US treasuries. When they sell treasuries, they are moving into hard assets. Central banks globally have been stacking gold, but silver is the Achilles heel. A single billionaire or a small sovereign fund could buy the entire remaining COMEX inventory with a single check. Historically, the gold to silver ratio has hovered around 15-1. Today, even with the recent moves, we are sitting far above that. If gold stays at $2,500 and we return to 15-1, silver is a $166 asset. The system cannot stay this distorted forever. By tomorrow morning, the delivery window for the May contracts will be closed. This is the point of no return. If the exchange halts trading to protect the banks, the physical market will completely detach. You will see a price on the screen of $35, but if you walk into a coin shop, the price will be $60 or $70. This is the premium explosion. The paper price becomes a fiction. If you don't hold it, you don't own it. The risk of ETFs like SLV is that they are backed by the same banks that are shorting the metal. In a default scenario, those funds often allow them to settle in cash. Imagine silver goes to 100, but you get 30. This is why physical bullion and vaulted storage like PSLV are the only ways to play this reset. The banks are currently in their last stand. They are using every trick: fake sell orders, spoofing, and media narratives. Every ounce you take off the market is a nail in the coffin of the paper manipulation. We are watching the death of the COMEX as a physical delivery mechanism and its rebirth as a pure paper casino. When trust fails, the price goes to its true value. For silver, that value is multiples higher than today. Ask yourself, if the system was fine, why are the vaults empty? The divergence is the greatest opportunity of our lifetime. As we approach the opening bell on Wednesday, stay focused. The volatility will be insane. They will try to shake you out. But you can't squeeze a vault that has nothing left in it. The drain is complete. Now comes the repricing. What is your exit price? Are you going to trade your silver back for paper, or are you holding for the total reset? The era of cheap silver is over. The era of the shadow finance reset has begun. Don't wait for the mainstream media. By then, the premiums will be 100%. Watch the vault levels and stay focused. This is the final move. The banks are out of time and the COMEX is out of silver. Make sure you are positioned before the Wednesday morning gap up. We have seen this pattern before in other commodities. From electronics to solar panels, the world needs this metal, and the supply has been artificially suppressed for decades. Stay physical. Stay focused. This is the moment we have been tracking for months. The COMEX default clock just hit midnight. Like and subscribe to Shadow Finance to track the vault drain in real time as we navigate this together. Keep your hands on the metal.